Testing check 1, 2. Hey, everybody. Good morning. Hope you guys are all having a great day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson, here to get rolling, get started, get the day going. It is going to be a wonderful day as we are seeing some volatility in the markets. So do me a favor, if you are brand new to the channel, give me a thumbs up. Make sure that you hit the subscribe button, all that fun stuff. Regular viewers, thanks for coming in. I really appreciate you coming in this morning. Let's go ahead and get started. Hey, it's the first day of February, and I don't have a whole lot to talk about. Realistically, outside of equities, there's not a whole lot going on in the market. And when I say not a whole lot, what I mean is, and I'm going to start with this today, just to show you kind of what my point is. We're not going to spend a whole lot of time going through currencies, and the reason is because look at our dollar. If I take a look at the dollar, what are we seeing that the dollar is doing? Well, the dollar is getting us a bit of basing, and that basing that we're seeing in the dollar is somewhat of a bullish signal, but overall, it's fairly sideways for the last few days to the last few weeks. And since we're fairly sideways in the dollar, we're not seeing a tremendous amount of movement in our currency futures markets. Now, we've got a couple of cross pairs that might be worth looking at. And so what I'm going to do today is not spend a whole lot of time on those markets. We're going to go about 15 minutes today, a little bit. Oh, I shrink my head down, don't I? We'll go a little bit less time on those markets, and then we will spend a little bit more time on our equities market. So anyway, here was the dollar that I was talking about with a little bit of sideways. And that little sideways market that we have in the dollar, a little bit of base being formed. Opportunity is for a breakout eventually over here, provided that we get a little bit of a move. Now, my feeling is that the U.S. is overall waiting on what's going to happen with our next stimulus package, right? And so with that next stimulus package is where we'll see this market give us some sort of a movement. So shrink your bean. All right, Lee, you win. Yeah, it looks to be a little bit of an inverse head and shoulders. I mean, you can certainly see that inverse head and shoulders pattern there, at least the formation of that as a possibility. And if we break out above there, I think that your price target is going to be right this area right up in here, right around 92.3. So I think there's room to run if we get above there, which would spell weakness for most of our currencies, right? That would spell weakness for our currencies overall. But let's start by taking a look at equities. Yes, I did. Amit, thank you for that, and I will definitely check that one before we check out for the morning, so on the Aussie New Zealand dollar. So looking here at the ES, last night when we were looking at this in our live trade room, we talked about the fact that we had a gap down, and our gap down was out of the prior day's range in the direction of the predominant trend, and our predominant trend is the 4-hour chart. Well, a lot of people, when they see a gap in the first minute and the stock gaps down, and it gaps down outside of the prior day's range, they immediately short that thing. Well, our rule is to wait for the first candlestick to close. And waiting for the first candlestick to close would tell me that we would get short below the first candle's low. Well, what did the market do all night? It rallied up the whole night. All night we've rallied up. And so we said, well, there might be a candle-to-candle opportunity here if it gets there before I go to bed. Well, it got there before I went to bed. I was actually watching Corey teach the options portion of our live trade room last night, and I saw that the candle that I was looking for, some sort of a candlestick reversal pattern, just didn't happen. And then the next candle didn't happen. And then I went to bed because I just felt like, okay, nothing's really going to happen. And overnight, we didn't. We did come up into our 15-minute supply area. So those of you that were looking at this 15-minute supply area, it didn't quite make it to the area. I mean, it just a bit outside. And this level that we selected was this base drop below the pivot high, which is usually a really good area of supply. We didn't quite make it into that level. So by not quite making it into that level's certainly not dead, but it is definitely on life support. And so what I would say at this point is that I'm going to remove the level because we came really close to it. And that would make me put it as a confirmation. But not only did we come really close to it, but we're also basing in front of it. Those two things combined tell me I should probably let that thing go. Now, I will say, for those of you that are a bit more aggressive, if you get below 37.31, you have, I think, a decent opportunity for price to continue to move down. Now, why would I say down instead of up? Our 4-hour trend is definitely down, right? Last night, we had this really nice long reversal 4-hour candlestick. We're putting in another really nice reversal 4-hour candlestick. And really, if this candlestick closes, now we've got another 54 minutes basically. But if this candlestick closes and it looks something like this upon its close, or even better, it looks like a shooting star and it turns red, then you've got a candle-to-candle opportunity on the 4-hour chart. Now, one thing that Liz, and thank you for pointing this out last night because I hadn't even looked at it, pointed out is that, yes, we have a downward momentum, but our downward momentum is definitely, showing that it's losing a bit of steam, right? And it's losing a bit of steam primarily because of these two big green candles that shot price back up, which changed our momentum enough to cause that bit of steam loss. And so while I'm still bearish overall right now on my 4-hour and my 1-hour time period, I am realizing that is something that can act as a real damper. So I think below 37.31, you make a little bit of a run. If we get up above this pivot right here, if we get up above this 37.75 today, then I'm thinking that all bets are off, because if you get above 37.75, now you've put in a new pivot high, right? You've gotten above this high, and then I would be more interested for demands. All right. So, any questions on that? Does that make sense? So overall, right now, we're still bearish, but we are open to the possibilities. All right, next in the NQ. So looking here at the NQ position, we see another picture of a bit of a rollover up here in the top. Yeah, one more hour on Thinkorswim. TradeStation does it slightly different, as far as I recall. We're looking for a bit of a rollover on this one as well, because we are still in a bearish market environment. Now, I didn't look at any supply levels last night because I just didn't feel like any of them were as clean as the S&P supply level, which, has basically held but has not gotten traded into. And so when I look at the NASDAQ supply levels, I've got to come way the heck up here in order to find it. And it's this base drop below a pivot high. Now, if we break below 13.15, I think that that once again looks very similar to what we're talking about here, in that our 4-hour candlestick is giving us a candlestick reversal pattern, and it would be a candle-to-candle short opportunity coming out of here, because then you're going with the trend direction. Once again, if that doesn't happen and we break above these pivots, all of a sudden we've kind of shifted a bit. Now, we're in a fair amount of volatility right now, so my gut tells me the markets are more apt to fall from this level, but we could be completely wrong, and I'm totally okay with that. And you've got to learn that it's okay to be wrong in this market, because especially when we're in that period of a lot more flux, that's going to happen. Now, if you look over the last few years, February has overall been net bearish, and so that's also adding into my overall net bearish bias right now. By the way, I am not a perma bear, because the minute we put in new pivot highs, I'm more than willing to shift direction. I consider myself a great politician. I will change my message at the change of environment. Oh, that sounds bad. But anyway, when I look at the Russell, on the Russell time period, 4-hour trend still very much down. Once again, same concept on a reversal problem. Yeah, it's a good way to think about it, Dan. It's okay to be wrong. It's not okay to stay wrong. So I would look that our next area would be potentially below here, 2079.6. And below there, I think, would be where if you wanted to try to get short, your short would have to come into play. All right. So those are our equity market levels of significance. I mean, the Dow. It's funny how I don't even really look at the Dow. The Dow, we talked about this area here being a potential reversal point when the price comes back up. It actually cut right through it and then based in front of it and popped a bit higher. So the Dow is actually the one that's closest to a potential reversal point, which would be right up here. That's the potential reversal point in the Dow if the Dow does give us a little thrust higher. Okay. So those are our equity markets. Anybody's got any questions, let me know. I will share this grid with everybody. So those of you that are Traders Army members, it is in the trade worksheet. All right. Next, let's go take a look at commodities. Yeah, it's at a little bit of one right now, especially with all this noise all through here, right? All this noise all through here. So you could even say on the YM, the same thing with our candle to candle short is still in play in the YM as well. It's just not quite as clean of a reversal candle, but the level up here I think is actually a pretty clean level, and it's an area that has been definitely a place that has attracted a lot of attention in the past. All right. Commodities. So, crude oil and gold. I'm not even going to talk about them because the market has done nothing in crude oil and gold, and it's gone very sideways. There's not a whole lot to talk about. We're still too far away from the expiration period for me to be comfortable with an iron condor in crude, and the pivot supply and demand areas seem to be getting sliced right through. Even the clean ones seem to be getting sliced right through. So I'm not really interested in any of those levels in crude oil until we get through these areas of supply or demand. And if we stay in between there for a while, it's okay for me to not trade it. Gold last night when looking at it, we saw the gap up. We said there may be an opportunity on a gap fill for this one, but in reality, nothing on gold either. So neither gold or crude oil are looking very good. But let's talk about silver because the Reddit community is doing their best to squeeze silver, and we did see a big gap up in silver, and we're up 10% in the silver markets as of right now. And so if you play silver, technically this is a really decent area of demand if we get a bit of a pullback. What I would tell you is the same thing I told everybody last night. There's no reason to go chasing these high flyers. No reason to do so. If it's already up 10%, it can get down 10% right away, or it can be up 20%. And if you're on the wrong side one way or the other, it just may not be worth it. The other side is that the margins on futures could shift very quickly. And I don't want to be stuck in the wrong side of that. So, yes, it's up. Yes, there's opportunity. I just don't feel like it's prudent to go after it. Now, in nat gas. So nat gas last night, we looked at what's interesting about nat gas is that we had price come right into our demand area and gap up out of our demand area exactly into our supply area. I mean, it gapped right into our prior supply area, which was this one right here. And so while everything looked peachy keen, there's no way that we're really taking that trade or that setup. Now, what we did talk about last night was that technically it didn't fall into every rule on the gap and go, but if you wanted to trade a gap and go position, then I was totally okay with you taking a gap and go trade on this because it gapped out of the prior day's range. And typically we want to see a gap and go in the direction of the predominant trend, although our predominant trend here had shifted due to the fact that we gapped up above the prior pivot. And so it wasn't the highest probability, but if you took the gap and go, you've already gotten a decent move away from there. I will tell you, because it's not the highest probability, if you took the gap and go, at this point, I'm adjusting my stop to under here, right under this 60-minute candle's wick. And the reason I'm doing that is because I just don't feel like we're going to get an explosive move higher. I think that we could whipsaw around here a little bit. And I am totally okay with moving that stop in this instance. I haven't gone 2-to-1 reward to risk yet. We've moved just about a 1-to-1, but not even quite that much. But by doing this, now what we've done is we've moved it to a 1-to-1. And as it gets to 2-to-1, then I'd move my stop up to break even. I really would be cautious with this one once again because we don't have a fully predetermined trend direction. But like I said, I'm sure a number of you took that trade. And then we have copper. So copper, we had identified this little supply level last night, this wick over wick area. And I got to tell you, it was a beautiful level that didn't get us filled. Nice wick over wick area just below a pivot high. I mean, just a bit outside, as they would say in baseball. And it is what it is. That is life. And so I need to switch it to a confirmation entry, leaving my rules intact and knowing that that's an okay level in a sideways market. Not an amazing level, but an okay level in a sideways market. And if we get another opportunity at that, we still might have an entry on a confirmation trade. On a 4-hour, not a whole lot to talk about, right? Kind of like what I said earlier. All right, so that is our not really, John. I didn't really pay too much mind to that because a lot of people, still talk a lot about, what is a pro gap or a novice gap or where it's gapping into, and it gapped right into supply, but it's already gone through that supply, right? I mean, if you think about that area of supply as being right here, and we did gap up into that, well, we've busted through it, and we hit it, and we just kind of base sideways around it. So technically, you could have taken the short on the gap and made a little bit of money, and then after 6 candles, gotten out. The real trade was the idea that we could get long at this area down here, but unfortunately, that was over a weekend, and nobody's holding that thing over a weekend if you're following the rules properly. That's what I said last night. I'm not the guy. So, by the way, did I have the demand level drawn and the supply level drawn? Absolutely, I did. But does it mean that I took those trades? Heck no, I didn't take those trades. It's over a weekend where there's a gap. And I think that the major reason for the gap is the fact that the eastern half of the United States is buried in snow. And I think that this is a more of a fundamental reason why we saw the price movement. So that's my overall feeling on that one. Agricultural futures, we don't have really any change from what we talked about last night. For those of you that were in the live trade room, I just don't see a whole lot of opportunity in these. I like the corn level. That's a bit of a level on top of a level. When I look at these two level on level, and Liz, nice job pointing that out last night. I originally only had taken the lower level. So for those of you that are not a huge fan of the level on top of a level, the two zones stacked on top of one another, you can be more conservative and just take the lower. The most, probably my optimal way to trade these is confirmation is the top level, and then limit level is the second level. Oh man, I'm so sorry to hear about that. Listen, there is lots of room in Texas. You can come to Texas because yesterday I was playing outside in shorts and a T-shirt with my kids throwing baseballs. I'm just saying. All right, so that would be our level in corn that I think is really the best one. And so I'm going to share this one out. I don't really have a whole lot to cover. In those ones, and then let me pop over real quick to the prior energies and metals and share that grid. All right. All right, next let's go talk about currency pairs. And so when I already kind of gave you the precursor to currencies. that there's really not a whole lot going on because we're a bit sideways overall in our dollar. And so by being a bit sideways overall in our dollar, all of our bonds and currencies are all fairly choppy. Now, I will say the euro is sitting above a potential breakdown right in here. We did get a really nice move down overnight right here at the London Open, which, I always like to say what happens at that London Open is an important part of our trading day. So I will wrap my lines around it now that that level exists. Last night when we were looking at this market, it was sitting right about here, and we didn't have this price action to lean on. Now that I've got this price action to lean on, it does give me a little bit more to go off of. The Canadian dollar, we are sitting here at an area where we could see a bit of a breakdown below here for price to make it down to this region. But once again, still in between our major levels that I'm not interested in kind of trading between. And then on the other pages, like I said, I don't want to beleaguer the point, and then I want to make sure I make it to the Aussie New Zealand dollar trade that was sent in. Looking at the New Zealand dollar, fairly sideways. Great British pound, fairly sideways. And the Japanese yen, we actually did have a bearish move, so we'll cover each one of these. But looking at the New Zealand dollar, I mean, if you just go to the 4-hour chart, it's telling you there's no sense. There's no sense in messing with this. We're popping through areas of demand or supply. We're breaking through decent areas of demand, all in service of a sideways price action. So until we get a definitive trend direction on here, I think it makes more sense to stay away and not force a trade. We did get a decent little move down right here last night that could hold, but I'm not willing to bet on it. Great British pound. Now the pound, we did get a move last night into this demand area, and it did wind up moving about 2-to-1 away from the level to the opposing area of supply. So you did get a 2-to-1 move out of this zone up to this opposing area of supply for a quick price, little gain, and now we've come back down through it. So obviously we're going to delete it, but that one did give you a quick 2-to-1 move out of that zone. Now what are we looking at? Well, I still think that the predominant move here is up since we're continuing to see higher lows, right? That's typically going to be a predominantly bullish move, but we've been unable to really get quality basing in front of the level and then burst through with any sort of strength. So if we see the dollar drop, this is my number one currency for a long. If we see the dollar drop, this is my number one currency for a long. Japanese yen, the other side of the picture is that we looked at this last night and we talked about a breakout. This is one that I normally say don't take the breakout of the pattern, but last night I said if you want to take the breakout on the short of the pattern, this is an ascending triangle. Now, funny, notice that in this one we have an ascending triangle and I'm feeling more bullish. And in this one we had an ascending triangle and I was feeling more bearish. Well, an ascending triangle in the context of a downward trend is actually a bearish signal. And so we did get a nice little move down on here. So if you took the short, I would say that you've got about a 3-to-1 profit already, maybe a 2-to-1 profit because your stop would be above this pivot here. And so you'd move your stop down right above this pivot right there at this point, lock in a little bit of profit. And that one's been working out pretty well. If you didn't get that short and you're still interested in what can I do, what's our next trade opportunity, looking at the 4-hour chart, we're coming into some demand down here. And so that would be your overall target, by the way, on this short. But if we start to rally back up, I would use the breakout point as the reversal trade. And then the Australian dollar, we've got a level way up here. We did fall off of this one last night, but it's a lot like the New Zealand dollar. Not a whole lot there to lean on. Now, looking at the Aussie New Zealand dollar, let me pull my text up real quick. Sorry, guys. Don't mean to take a little longer. I just got it hidden in here. There you go. It was a breakdown on the 1 hour between the 1.0626 area. Right below here. Now, my chart might look a bit different than yours depending on your broker. Because they're never exact, but I would say that below here you do have a breakdown candidate, and that's because what's our predominant trend direction, right? Our predominant trend direction is most clearly down. And if, I didn't even see this on the 4 hour. Whoo-wee. So yeah, when I go back to the 4 hour and I see all this basing and I see this area here and I see this area here, I think that I really like the clean air you have here. Your first target would be this 1.0595. I think that's a good first target because of this area back here to the left. But then ultimately, I think you can make it all the way down to here, 1.0538. So this could be a decent swing trade opportunity. So good find on that one. Another good find that we had last night was the daily chart on the Swissy. And the daily chart on the Swissy has just broken down below what looks to be a really nice setup and a potential head and shoulders pattern here. We were seeing the lower highs here, same lows. We just broken down below there. So let's see if that one runs down a bit further. I think that's a decent setup as well. All right. Hey, do me a favor. If you're still here watching and you haven't clicked the thumbs up icon, please do that. That means a lot. Computers really appreciate it. If you are a regular returning viewer, then thanks for coming in. I appreciate you swinging by today. I'm gonna throw, just for the quick heads up, in my Twitter feed, I'm doing a fundraiser for a nonprofit homeschool group that we're a part of. It's picking Super Bowl squares. So if you want a chance to do we'll call it a 10-to-1 reward to risk. It's even a 20-to-1 reward to risk at the end of the game. I'd appreciate it if you guys wouldn't mind going in and following the link. I'll put it up in my Twitter feed today, and you guys can follow the link. It'd be awesome. It's a donation anyway. So, and if you want to, if you want a chance to do a 10-to-1 reward to risk, a 20-to-1 reward to risk trade, and donate, that would mean a lot to us. We'd appreciate it. So, all right, everybody. Well, that's all I have for today. Like I said, check my Twitter feed. I'm going to put that in my Twitter feed today, and I'd appreciate it if you guys would take a look at it. But that's all I got for today. Hope you guys have an amazing, amazing day. Stay safe out there. Don't get caught up in all this noise and hype, and keep your stops tight. Later, everybody.